What is property, plant and equipment? Property, plant and equipment are long-term tangible assets that are physical in nature. These are non-current assets that are used in the company's operations for a longer part of the time. They are also called as the fixed assets of the company, as it cannot be easily liquidated. Property, plant and equipment is considered a long-term capital investment, and its purchase shows that the management has a belief in the long-term outlook and profitability in the company. PP&E assets are expected to generate economic benefits. Examples of property, plant and equipment include machinery, equipment, vehicles, buildings, land, office equipment, furniture, fixtures. Net PP equals gross PPE, plus capital expenditures, minus accumulated depreciation. Incorporated Corporation owns machinery with a gross value of $10 million. Accumulated depreciation recorded so far was at $5 million. Due to the wear and tear of the machinery, the company purchased new equipment at the cost of $2 million. Net PP equals $7 million, $10 million plus $2 million $5 million. The cost of PP&E shall be recognized as an asset only if it is probable that future economic benefits will flow to the entity, and the cost of it can be reliably measured. PP&E that qualifies for recognition shall be measured at its cost. The initial cost may include the following. 1. Employee costs directly attributable to construction or acquisition of PP&E, the cost of site preparation, initial delivery and handling costs, installation and assembly costs, the cost of testing assets functionality, professional fees, etc. 2. If payments for an item of PP&E is deferred beyond standard credit terms, the difference between the cash price equivalent and the total cash outflow is recognized as interest over the credit period unless the interest is capitalized. 3. If the asset is acquired in exchange for another asset, the cost will be measured at its fair value unless there is an absence of commercial element or the fair value of both the asset received and the asset given is not quantifiable. If the asset obtained via exchange transaction is not recorded at the fair value, then it has the cost determined based on the carrying amount of the asset given. 4. Subsequent cost or capital expenditure to PP&E can be added if the investment is made either in updating and maintaining existing equipment or purchasing new additional equipment. Sigma Incorporated acquires a new asset. The purchase price of the asset is $800,000. Also, the company incurs the following costs. Custom clearance, $400. Rent of lorry, $100. Site preparation and planing, $200. Labor charges, $100. Installation charges, $50. A lorry has been acquired on rent and used by the business for transporting anything and not specifically obtained for this asset. Include $20,000 salaries of entity's own employees working full-time. Solution. Purchase price, $800 treated as cost of asset. Custom clearance, $400 treated as cost of asset. Rent of lorry, $100 treated as expenses. Site preparation and planing, $200 treated as cost of asset. Labor charges, $80 treated as cost of asset and $20 treated as expenses. Installation charges, $50 treated as cost of asset. Total of cost of asset, $1,530. Total of expenses, $120.